What's up, Crypto Talk? My name is Khalil, bringing you cryptocurrency videos as always, like technicals, opinions, and general news and knowledge. Today, I will be breaking down the bullish fundamentals of cryptocurrency, and even though we have had lots of FUD, fear, and PTSD from previous bull markets, and yes, we should be cautious short term, I wanted to share my opinions and thoughts on you of the long-term game here. If that sounds good to you, stick around, smash that like button, support, and subscribe so you don't miss out on any more. So first up, with insane volatility of Bitcoin lately, I have this article from Cointelegraph. The Bitcoin bounce at 28.8K activates century-old financial models bullish thesis. And I actually brought this up about a month ago, maybe in one of my videos. If you go back and look at them, it's the Wyckoff method. And Wyckoff in 1888, the model attempts to navigate financial market trends based on the relationship between the supply and demand of assets. The method has two schematics, an accumulation and a distribution phase. In the accumulation setup, an asset signals bottom out following a sharper price decline. It eventually leads to the price rebounding to the upside. Meanwhile, the distribution setup sees the asset topping out for a solid price move uphill, but after that, the price reverses direction to the downside. Each setup has 5 unique phases. Right here, we have the Wyckoff events and phases during distribution. So we've actually already had this one play out here. This is where we peaked out at 64K, something like that, and we just had this major crash down. So this is what's already happened. We'll show that here in the charts shortly. Now, this is the phase we are in right now. Comparing the Bitcoin recent price action and the events presented in the Wyckoff accumulation schematic, it appears the cryptocurrency is grappling with its last point of support, phase C. All right, and this is the chart that we have right here. They're kind of grappling the support phase C here, as D will lead to higher demand and E being shot upwards. Now, looking at the actual charts here, I wanted to bring this up. If we go into the daily, we can actually see we had this massive run up, right? 1, 2, 3, and then we started crashing down 1, 2, and then we have like a major 3. So going back to this, we had 1, 2, 3, and 1, 2, 3, major crash down there. Now we're in this accumulation phase, and that's basically what they're saying is this has been an old historic method that people follow, right? So if people are generally following this price action, that kind of means we are the ones who are making the charts, which is pretty cool to see. Now I wanted to jump into the 4-hour to give you guys some more short-term thinking. We have this channel that we just came down out of, and we also have, let me go into the 1-hour. We have this channel that we kind of just been bouncing in, right? And we kind of moved upward, broke into this channel finally, but we were in this little triangle, so we broke down out of this triangle, which was a bearish formation. So we kind of had a few formations, 1, 2, and 3 forming throughout this whole entire process here from June 22nd. But we've had like this major breakdown, and we're kind of seeing where Bitcoin wants to go right now. On the 1-hour, it's looking pretty bullish. On the 4-hour, it's looking kind of bearish here. 8-hour daily, we still have some room to go down. We have massive support there at that $29,000 level, which was back here in the beginning of the year. So we're just kind of waiting to see how things play out. But the chart actually does kind of resemble very similar to this Wyckoff method. So I thought this was super interesting. Like I said, I brought it up about a month ago. Tell me your guys' thoughts on it. Now, we have this Wyckoff method here, but does this mean that we're actually just going to go up in price with this? Well, no, there's some other indicators showing that we may have bullish strength. Looking at this article here from the Crypto Sonar, the sign that whales are accumulating Bitcoin. So the sign to focus on here is Bitcoin net flow to from exchanges. To understand that, you first have to kind of look at the terms. So the exchange inflow is the number of coins deposited into an exchange wallet. If that increases, it means that more people are sending their Bitcoin or crypto to exchanges, indicating a dump. On the opposite side, exchange outflow is the number of coins withdrawn from exchange wallets. If this value goes up, more people are sending their Bitcoin or crypto to individual wallets, meaning they are buying more and holding it. Now, as per data by CryptoQuant, here is the Bitcoin exchange net flow graph. It looks like this for the past 7 days. So the Bitcoin is in the deep negative behavior. And what that basically means is a negative Bitcoin behavior is more Bitcoin is moving out of those exchanges than in. So example is a graph of 5K Bitcoin moved out to individual wallets yesterday alone. The interesting thing is such a large movement of coins means some whales have started accumulating. Now, it's pretty hard to say whether the price will head, as it's been freaking volatile the past few weeks, but the current upwards trend is probably one temporary. However, some experts believe the market is going to go further down, but long term, it will go up. One thing's for certain though, with whales starting to accumulate more Bitcoin, they are bullish around the market. So this is pretty cool to see on-chain data like this showing whenever we spike into the negative, it means more Bitcoin is being put on wallets instead of exchanges, showing a sign of people holding more cryptocurrency. And we saw a massive spike in that number here over the past couple of days. We'll see how things play out. I thought that was pretty interesting. Let me know your thoughts on this one. Now we have two indications of some bullish price action here. We also see some weak hands being shaken out, as this report says. Meltem Demirors, a well-known cryptocurrency bull and the chief strategy officer at digital asset investment firm CoinShares, revealed she believes the cryptocurrency market correction is shaking out the weak hands as there are not a lot of long-term holders selling. She pointed out that cryptocurrency market had 200 days of market expansion, and investors can't have a number go up forever. What we're seeing, she said, is a correction and a contraction, and a lot of what is getting shaken out is what we call the paper hands, the weak hands. Now, paper hands is a term used to characterize people who sell cryptocurrency or commodities or any asset when markets turn red and bloody. Paper hands are the opposite of diamond hands, which keep holding onto their assets even when price drops significantly, because they believe in that asset, commodity, or whatever it is they're trading. But to support her point, a lot of retail entered, didn't go and do their research, and is now selling. Long-term holders, she said, aren't selling on-chain data, reveals wallets that have been holding for a long time have actually been using this opportunity to accumulate. So what she's saying is retail, which are the small investors such as you, the average Mojo with not millions and billions of dollars, they didn't go into the market doing any research. They don't know how cryptocurrency works. They just know price goes up and down. They don't even know what cryptocurrency does, how to actually use it. Most people don't understand the first thing about cryptocurrency. This is an opportunity for whales. Whales have not been selling crypto. The only people who have been selling are short-term investors, purely out of not doing research. So you can kind of see where the sentiment holds there as long-term people who understand crypto, understand Bitcoin. And if that's not bullish enough for you, the crypto adoption rate is rising steadily throughout price crash. And the key takeaways are global macro investor expects 1 billion crypto users by the end of 2023. Since 2019, Ethereum has seen faster adoption than Bitcoin itself. The number of DeFi users has almost tripled since the start of the year, showing strong price action in the crypto world of DeFi, so it's pretty interesting to see. 1 billion crypto users by 2024. This firm compares the rate of adoption of crypto to that of internet itself. Nothing crypto is actually being adopted at a faster pace than the World Wide Web. The graph shows that the internet took 14 years to reach 1 billion. A number of investors, Raoul Pal, expects crypto to reach that by the end of 2024. While Bitcoin was the biggest adoption driver until 2019, since Ethereum has even seen more impressive growth that has surpassed Bitcoin in terms of non-zero on-chain addresses. The main driver behind Ethereum's growth is last year it's been the explosive of DeFi protocols that creates trustless peer-to-peer decentralized financial instruments using smart contracts. And that's what I was kind of bringing up. It's interesting to see how smart contracts, peer-to-peer, decentralization is actually taking hold in the world of finance today. It shows where the market wants to move, right? So a couple of coins out there are Polkadot, Cardano, Ethereum, Chainlink. These are smart contract platforms. Aave, MakerDAO. So we'll see how these projects hold up. Solana, Kusama. There's just so many awesome things out there to see and how it's advancing the world in general. I wanted to bring all this up because I wanted to show a more bullish picture on Bitcoin in general, right? We have all this bullish news, even though we see the price of Bitcoin kind of tanking here. So I want to show the long-term goal. We see that the long-term goal here is going up. Now, if you look at something like the dollar, the US dollar, we're fighting inflation. A currency that's created to inflate will always go down in price over time. A currency that's made to deflate will always go up in price over time. To wrap things up, I basically just wanted to paint our bullish long-term game here. The actual price of Bitcoin is not what matters. As we know, the value of Bitcoin will cease to grow every single day. So don't let the FUD shake you out. Keep holding on. Keep having diamond hands. If you're not sure how to trade, stick to the YouTube channel. You can find me on Twitter. So we have this breakdown here. Short term, we could be seeing some 30K price action, 29K price action. But we have lots of buying support around there, guys. Until we break this 30K level, we may not ever see 20K again. And we'll just see how the next couple of months or days play out, even as we need to break this long-term downtrend, this pink line that we're in. We'll see how everything plays out. I hope this was valuable information. If so, once again, go ahead and like to support the video, subscribe so you don't miss out on any more videos. I'm not a financial advisor or professional, but I will see you in the next video so we can go over more things. Thank you.